Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic which is EBITDA versus the operating income. EBITDA, one of the very important driver that is used in valuation purpose, especially for the heavy capital intensive based company. Well, let's try and understand this topic in the much detailed format. Begin with EBITDA, that is your earning before interest, tax, depreciation, and amortization. They are often used, to find the profitability of the company. So EBITDA is basically an indicator that is used, for giving comparative, you can say comparative analysis and for various companies. So it is one of the major financial tools. It is used for evaluating firms, with different sizes, structures, having taxes, depreciation, and so on and so forth. So how does this thing EBITDA exactly work? See, EBITDA is calculated something like this. EBITDA is equal to your earning before interest and tax, that is your operating income, right? You add back over here the non-cash expenditures. What are the non-cash expenditures? Depreciation. Do we have amortization? Yes, amortization is also one of the part of the non-cash expenditure. So when you add from to the earning before interest and tax, we add this non-cash expenditure, we get a real picture of this particular profitability analysis. EBITDA can also be calculated by this fashion also. EBITDA is equal to your net profit. You need to add back over here the interest because you have to take that into consideration since it is earning before interest and tax. So you have to add back taxes also, and then depreciation, and then your amortization. So this is the two ways by which you can calculate EBITDA for any company. Over here, as you can see, this is depreciation. Depreciation is, is the reduction in the value of the tangible assets. It is, over time during the usage, which results in wear and tear of the tangible assets. You can see amortization. Amortization is, is a financial technique which is used to incrementally reduce the value of the intangible assets of a company. But that's a difference. Now, there's a thing called the next that we have in the difference is the operating income. See, over here, first, what we are doing is I'm trying to explain you what exactly this topic is all about, and then we'll get into the nitty-gritty of the differences. Now, the operating income is often used to find out how much the revenue of the company can be converted into what we call as the profit. So operating income is a term which is used to calculate the amount of profit that is gained by the operations of the company. You can say operations of the company. So it can be computed, by deducting the overall expenses from the gross income. So let me show you something. Operating income is equal to, we have gross income less we have operating expenses. Once we do that, we have your operating income. Or we can do something like this for gross income, which if we don't have, we can find gross income is equal to your net sales less we need to deduct something called cost of goods sold. So by that we get our gross income. So operating income versus the EBITDA, they are slightly different than each other. Yes, if you see operating income versus EBITDA they indicate the profit made by the company. But EBITDA over here, it shows the profit including the interest, tax, depreciation, and amortization. In case of operating income, it tells the profit after taking into account the operating expenses like depreciation and amortization. So let's get started with the differences with the help of infographics. Okay, let's start with the differences. We have the first thing, that is the definition. EBITDA is the indicator to used is an indicator used for calculating profit making ability. Try and make the difference over here. Profit making ability of the company, while the operating income is an indicator which is used to ascertain the amount of profit generated by company's operating activities. So here it is more, the thing that is more emphasized, the more injection which has been done is towards the operating act, and over here it is used for calculating profit making ability of the company. Second difference, where exactly this is used. So it is used to calculate the earning potential of the organization. Many of the investment bankers, private equity players, they use EBITDA as a key driver to calculate the earning potentials of the organization. And operating income is used to is to ascertain how much revenue can be transmuted into profit. Like what is the amount of the revenue, what is the amount of the operating profit that can be transferred into the real profit Basically, operating revenue is transmitted into profit here, and it is used for earning potential of the organization. Let's go for the third difference, the calculation part. So EBITDA is what we just learned, EBIT plus debt plus amortization. And the second method, what we learned, net profit, and you add back all the elements that should be a part of. Operating income over here is calculated as your net sales. Net sales means your gross sales, less any sales returns or discounts and all, less the COGS, that's your cost of goods sold, and less you need to deduct all the operating expenses. We have discussed. Now, fourth, the recognition part. EBITDA is not an official GAAP measure. No, it is not. But operating income, yes, absolutely, it's a GAAP measure. GAAP measure means your US GAAP or maybe an IFRS. Now, what are the adjustments? See, adjustments are done elements like the non-cash expenditures like debt and amortization by the company, which is a part of it. And over here, no such adjustments are made. Direct calculations are made, and there is no any other external data that has been fluctuated here or there. Well, there are some of the key differences that you also should know. The first and the foremost between the operating income, the EBITDA, will go something like this. EBITDA is basically over here it is an indicator which calculates the income of the company before paying any expenses, tax, debt, and amortization. On the other hand, if you see operating income, it is the indicator calculates the profit of the company after paying off any operating expenses. Now, it does not include interest and taxes over here. Second, EBITDA is used to find out the total earning potential of the company, and operating income finds out the revenue generating capacity of the company that can be converted into profit. Third, EBITDA is not an official GAAP measure, and hence companies use this to project the earning capacity of the company to maximum level, whereas the operating income is official measure of a GAAP, and companies cannot make any adjustments to it. We have the last one is EBITDA can be measured, by adding depreciation, amortization to EBIT, and it can also be calculated by adding interest, tax, depreciation, amortization, net profit. Operating income, on the other hand, is calculated by subtracting the operating expenses, and from the gross income. So, well, this was the part of answers. We have understood the concept. Now, let me finally recapitulate everything with the final thoughts on EBITDA versus operating income. EBITDA versus operating income is an indicator that are used basically to find the profit making ability of the company. EBITDA looks for the income generating the capacity of the company, and operating income looks for the income that can be changed into. As an investor, you need to consider the operating income versus EBITDA, while making a decision. So, however, only these two indicators aren't enough to make a sound judgment about the financial health of the company, but you need to look at the other ratios also to understand how the company is run. Looking at all the ratios which that is going to help you to understand the holistic view of the company, so that you can take a prudent decision about the investments. That's it for this particular topic, EBITDA versus operating income. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.